China's use of the renminbi in cross-border transactions has reached record highs this year as closer ties with Russia bolster Beijing's efforts to internationalize its currency and cut dependence on the dollar.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Morning Market Rundown. It's Friday. It's a very auspicious Friday because it's the last day of the month, and the way things are going, gold could close a new monthly all-time high once again. There's also a very special edition because the FT has a report out, or a story out, I should say, discussing the internationalization of the RMB. China RMB usage surges to new all-time highs is essentially the gist of what they're talking about, and they make a case. We're going to comment on that extensively in context of what we believe is really going on. Next is PCE due out at 8:30 this morning. That's supposed to be a non-event. We'll tell you why it probably will be a non-event and why you should never assume something's going to be a non-event. So stay with us right now and let's get going. There's the front page. You can take a look at that while we're giving you the markets. The dollar is 101.36 unchanged. 10-year yields are 385 unchanged. SP 500 is 56.14 up 12. VIX is 15.57 down 7. Gold is 25.19 down half a buck to 75 cents. Silver 29.53 up 10 cents. Copper is 4.22 up 4 cents over 1%. That's probably holding silver up. Gold, silver is slightly lower. WTI 76.69 down 27. Natural gas 203 and change, unchanged bid. Bitcoin unchanged, a tad higher, 59.36, 360, and Ethereum is 25.12 down 16. Platinum, palladium are diverging the other way now. So forget that whole economic thing I mentioned. 984 and palladium down $4, and platinum is 935 down 2. Grains are all up. Soy, corn, wheat up 10, up 2, up 2, 1023, 384, 549 and change, respectively. Front page, long, slow goodbye to the U.S. dollar standard. That is a story that we have mostly behind a paywall, and it is a write-up of a very well-written piece by James Grant. All of his pieces are well-written, but we thought this was particularly interesting, so we wrote our own coverage of it. The Interest Rate Observer, for those of you not familiar, an esteemed publication by a guy that I've been reading since 1988. If James is listening, 1988. I've been reading you longer than some of your readers have been alive. All right, the BRICS Summit is getting spicy. Well, it is. Gold, Goats, and Guns with Tom Luongo and Eric Young. That was a broadcast on the Chinese culture and where they are in their life cycle of buying gold. And it turns out they're not very far into it yet. Okay. First story, the main story, the FT, China's international use of renminbi surges to record highs. Okay. This is an excerpt from that and the main chart. We're going to reserve some commentary in the premium section, but we'll give you an idea of what's going on here. China's use of the renminbi in cross-border transactions has reached record highs this year as closer ties with Russia bolster Beijing's efforts to internationalize its currency and cut dependence on the dollar. See, this year, we're going to discuss that. That's not causative. There's the chart. As China's outbound payments in dollars decrease, their outbound payments in renminbi increases. So, signaling a broader acceptance of renminbi for cross-border transactions. So they're doing stuff locally. We're not paying you in dollars anymore. We're paying you in yuan or renminbi, however you say it. And they note that this is a new high. You could see the trend has been in place since 2010. The trend has actually stabilized from 220 over, and now it started accelerating in the middle of, well, right after the first quarter of 2022, right? So rising, big drop off. We'll figure out why later. Flattening since 220, and then steepening again, but volatile since 222. This is the internationalization of the yuan. You could see that they're using less and less dollars. Why is the dollar weaker, you may ask? That's a good question. The reason is because China isn't the only country that uses dollars. So every dollar they're not using is a dollar that they're selling, and that dollar gets orphaned, and then either the Fed has to scoop it up by raising rates or someone else has to buy the treasuries. So that's why the dollar remains strong against other G7 fiat. Continuing with the article. In July, 53% of China's inbound and outbound transactions use the Chinese currency, according to data from the State Administration of Foreign Exchange, also known as SAFE, up from about 40% for the same month in 2021. We add this note for everyone here. Consider this correlation. China cross-border use of renminbi increases coincidentally with global gold prices accelerating, going up since 2022. Okay, we're going to have more to say about that pointedly at the bottom with a very special chart that we put together just now. Let's go on to PCE. PCE day, PCE release, no surprise, is a surprise. That's our comment. PCE is today. Markets are not focused on this at all and are instead looking at unemployment next Friday now as they feel the disinflation story is baked in. That picture is a graphic of the expectation of rate cuts going forward, hence its negative lowering of rates over time. Pretty aggressive. Bloomberg's consensus poll for PCE expects monthly core PCE unchanged at 0.2% month over month, which puts it at an annual core for them of 2.7% year over year. Okay, Bank of America, for example, they believe the headline will be 0.17, which is 2.6 year over year, and the core at 2.7 years. So there's really no big variations, very tight dispersion around the mean. Goldman, another example, says today the focus will be on core PCE and think the possibility of much of a meaningful surprise is low. Okay. Reminder to Wall Street, the definition of a surprise is you don't see it coming. Reminder to Main Street, when Wall Street tells everyone they don't see a likely surprise, what they're really saying is they're confident in their work, which can lead to complacency, which is how surprises happen. Always stay vigilant, but you don't have to panic. That's PCE. Data on deck, PCE, as I said. Well, it's Friday. Let's take a look at the charts before we go to the premium section. Let's take it to the daily. It's pretty significant stuff here, I got to tell you. I threw a couple posts out yesterday. This is looking more and more like an interventionist slam. We'll say when I say intervention, you think Bank of International Settlements or someone bigger than the bullion banks. This behavior here, I don't know who that buyer is. I suspect it's macro discretionary. I don't know who this buyer is. I suspect part of it is a bullion bank, but we're now looking at, remember on by lines? Here's the lines. Well, let's take out Michael's line here for a second. Here we are. Slam, range higher, slam, range higher, slam, range, already testing the highs. The duration of these pauses after the slams is decreasing. It wasn't too long ago, those slams would lead to a 2-month decrease, a drop, not a sideways movement. So I think whoever is in this market might be running out of patience. And it would make sense considering that you're bumping up against the October 22nd BRICS meeting, as well as the U.S. election, which in my opinion won't really end until January 5th when the inauguration happens. So there could be someone out there losing patience who needs to buy. implies that it's someone who has a quota or a deadline. That could be a bricks bank. It could be a bricks player. Needs to buy could also mean someone who's short and getting uncomfortable. That could be a bank, a bullion bank, a hedge fund, who knows? But this isn't a top until we get a blow off. So even in the short term, you want to look for a spike before we blow off. I doubt this rolls sideways and then drops. I mean, it could, but I don't see much of that. Silver, silver's being used to buy gold still. And today you're getting a little bit of a break, but that's what's going on. Silver's in a range over these days. You see this? Silver's in a range. High, low, right? It's almost like a wedge. And gold's not. Gold's not in a range. Gold's trending. Someone is using silver to buy gold. So they're buying gold on silver weakness, and they're stomaching their silver shorts when it goes up, and other people are doing it, so it's staying that way. I want to look at oil for a second. Oil seems to be in a range, and it's in a range for a good reason. This is the old gold chart. If you're trading oil, you're trading wedges now. So you want to start looking at things like trend lines, but I'm focusing on the volume of shorts. And I think the market's going to stay in a range, but I am bullish over the next several years or so. However, going into sell season, if I'm a little bit worried about gold, I'm very worried about oil. I think whoever's left long oil on the macro side is going to throw in the towel. So I would not be surprised if between Labor Day and Halloween, oil really struggled. Who knows? That's it. Happy Friday. Again, auspicious day. We've got a new monthly close. Let's put that chart up for you. Let's put the gold chart up for the monthly so we can all take a look at it and hide those lines. That's pretty damn good, right? And that's not a new monthly all-time high by $1. That's going to attract more money. I can't believe it. But macro discretionary is going to buy this again after Labor Day. Now, they may be wrong to do that, but there's going to be people buying this again after Labor Day. It's crazy. I think seasonality may be repealed. I don't know. I mean, geez. I'd hate to be a bullion bank right now going into this time of year and not having any sellers. I really would hate to do it. All right. Have a great weekend.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1-ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. While we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1-ounce gold Krugerrands for only $60 over spot. And again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.